Joining us today is Sheraz Shere. He is the head of payments at the Solana Foundation, and we'll be talking about the latest developments with the Solana ecosystem, as well as their new partnerships with major payment vendors around the world. Welcome to the show, Sheraz. Good to see you.
Thank you for having me, David. Appreciate it.
PayPal just released their own stablecoin, and now Visa has announced a partnership with Solana. This is huge. Tell us about this.
Yeah, sure. I think it'd be helpful to explain kind of how Visa's business operates, and then I can kind of explain how they've decided to use Solana. So every day, Visa settles trillions of dollars of transactions over a year. If you think about kind of the flow of credit card transactions, when you swipe a card, there is a bank behind the merchant that needs to get paid, and there's also a bank behind the credit card that needs to pay that merchant bank. So Visa facilitates these transactions. Traditionally, these transactions run through fiat rails. And what Visa has done is they are realizing as more and more banks, issuing banks, and merchant banks are touching digital assets and want to settle and transact in digital assets, Visa recognizes that they also should facilitate these transactions using things like stablecoins. So Visa had done an initial pilot a couple of years ago with USDC on Ethereum, and just recently they decided to scale their pilot onto the Solana blockchain by using USDC on Solana, and added a couple of very large banks, including WorldPay, which is one of the biggest merchant acquiring banks globally.
Okay, so exactly how will this Solana integration affect Visa's operations?
Yeah, it's a great question. So essentially, if you think about how these flows work, there's three parts to, or there are three core processes in a Visa transaction. So there's authorization, clearing, and settlement. Authorization happens if you imagine, you go to a point of sale and swipe or tap your card. That instant, there's an authorization message or request sent from that terminal that winds up going to your bank. So whether it's CIBC or Bank of America, your issuing bank is essentially saying, yes, David or Sheraz is good for this transaction. And that happens instantly. At the end of the day, the bank that supports the merchant essentially has to create a clearing file that says, okay, here are all the different places that I need payment from, right? Because essentially the merchant is giving you credit, right? Letting you walk away with those goods and services, but they need to get paid. That clearing file Visa then facilitates and then sends out to all of the issuing banks. When I say issuing bank, it's the bank that issues a credit card. And then there's the settlement flow where the issuing bank then has to the clearing file will figure out the net payments, and the issuing bank needs to settle these transactions. Visa facilitates this. Now that you've got issuing banks that, for example, might issue a crypto-backed card and they deal with digital assets, they don't want to move that stuff on chain to fiat. So they're like, hey, Visa, I would love to settle this transaction using stablecoins, for example. So now there are certain issuers like Crypto.com, as you may have seen in the earlier pilot, and then merchant acquiring banks such as WorldPay that are saying, hey, I want my settlement flows to be in USDC, for example. So for certain settlement flows, they will use USDC on the Solana blockchain to facilitate those settlements between the issuer and the acquirer.
I'm reading this article. Apparently, one of the reasons why Visa chose Solana as part of this partnership is that Solana has a very impressive transaction throughput. And so unlike other blockchains like Ethereum, which processes transactions sequentially, Solana can do a lot more in the same amount of time. Can you explain the mechanism around why Solana's throughput is higher than other blockchains?
Sure, yeah. So Solana was architected with one North Star, which is actual true scalability. So tens of thousands, hundreds of thousands of transactions per second. The architecture behind Solana is, if you can think about it in terms of like traditional like compute processing, multi-threaded versus single-threaded, which means that Solana can process multiple transactions in parallel. And what that means is that from a performance perspective, you have a blockchain that is extremely scalable. So today it can do tens of thousands of transactions per second. With the addition of new clients, that is going to go up to the hundreds of thousands, potentially millions of transactions per second. But in addition to that, the transactions are extremely cheap The price of the network transactions are extremely predictable. And then you have a tremendous decentralization with we have like 2,000 node operators that actually run the infrastructure as well. So to answer your question, by design, Solana was built for scalability and throughput. And I think one of the advantages of building Solana more recently was I think you could see some of the design decisions that were made in early blockchains and really build and improve on those.
Is there a concern that Visa, being as big as it is, will clog up the throughput of Solana to the extent that the capacity to service other clients or other use cases may be limited?
I think right now we're in such an early stage that there's no concern about that. And I think if we were to get to that point, I think it's going to take some time. And I think over that, if you look at the roadmap of what's kind of coming next in the Solana ecosystem, again, with the additional clients coming in, I don't think we would be concerned about it. And it'll be actually a great problem to have. But yeah, I think if there's any blockchain that's gonna support throughput at that scale, it would be Solana. So we'll happily address that problem if and when we get to it.
So typically, Solana's transaction fees are under less than $0.001, so less than a tenth of a cent. Now, this Visa partnership, would that change the transaction costs?
Yeah, great question. So one of the reasons, and in fact, Visa just published a technical blog. Their research team published a blog post that laid out what some of the reasons were on why they chose Solana to expand this out. One of the key reasons was predictability of fees. In fact, there's a chart that you can see in their blog post that shows historical legacy fees on Ethereum and other blockchains and Bitcoin versus Solana. So fee predictability is one of the key reasons, or one of many reasons why Visa chose to build their USDC settlement pilot on Solana. And there was a recent update to the client software, which you can call local fee markets, which addresses this in a very robust way. So think the analogy here is imagine if there are like 5 different use cases at a given point in time that are active on Solana, and one of them is a crazy NFT mint, and there's hundreds of millions of bots that are flooding the network trying to get a piece of this new NFT mint. What local fee markets does is it contains that demand for that use case in such a way so that, for example, Visa settlements would still not see any congestion or any rise in fees, but fees for that specific NFT mint may spike to address some of the demand. So in general, the predictability of Solana pricing, because of this local fee market mechanism, makes it such that congestion that may occur from like high frequency trading or an NFT mint won't affect other parts of the network and other use cases. So you can go and purchase that coffee using Solana Pay and not have any impact to the fees or the settlement times of those transactions.
So I think the partnership currently involves USDC. So Visa wants to settle its USDC stablecoin over the Solana network. Do you see a day in which Solana could help with fiat transactions as well with Visa?
Yeah, so by its nature, so a couple of things. One is, interestingly, Visa, the great thing about working at Solana Foundation is it's open source technology. So we actually don't have to partner with anyone to use it. It's, anyone can come in and choose to use the blockchain. So that's one of the, makes my job easier, because our role is really just to educate people on what the Solana blockchain is, how it works, why it's performant, how the protocol, enables such fast and cheap transactions. So Visa selecting to use the Solana blockchain was something they did through kind of independent research. They did a lot of diligence. We spent a lot of time with them explaining how the protocol works. In terms of fiat, the blockchain is designed for digital assets. So fiat in the form of stablecoins is is probably the use case that's going to be most common with large financial services enterprises that are looking at digital assets. So USDC is example, as you probably saw, and you mentioned PayPal announced the launch of a stablecoin, which hopefully we'll soon see on Solana as well. So in general, fiat, we don't really touch fiat rails because by its very nature, the blockchain will deal with digital assets. So USDC and US dollar stablecoins, or things like EuroC in Europe, which is being launched by Circle on Solana very shortly.
Are you concerned about depegging risks around stablecoins? USDC in particular has had a history of depegging early in the year, for example. One could speculate that with even higher transaction volume, this risk could become even more apparent.
Yeah, in fact, I believe Jeremy was just on the podcast Circle a couple of days ago on Unchained and a few others. I think Circle is a tremendously transparent organization in terms of showcasing its reserves. And I think, he talked a little bit about how BlackRock has a fund now, which provides full transparency. So I think with any stablecoin, you buyer or user beware, right? So, you want to make sure that if you're an enterprise or a user and you're engaging in the usage of a stablecoin, making sure that you understand who the issuer is and what the reserve model is very important. I think Circle is a very trusted, regulated entity. And I think most of the enterprises engaging with stablecoins will choose stablecoins such as Circle's or PayPal's because of the transparency and reserve. So in the case of the depegging of the USDC was kind of a unique event where Silicon Valley Bank went under, and there was a run on the bank, and Circle had some exposure to SVB. But I think part of the desire for everyone in crypto is for more banks to support crypto native companies, right? And allow somebody like Circle to bank with some of the larger, too large to fail banks, where there's less of a concern on the run of the bank. So in general, I think events like that are pretty rare. And I think Circle has done a lot to up-level its banking infrastructure and treasury infrastructure. And so I think there's a tremendous amount of confidence. And I think in general, this is something that everyone is going to welcome: more regulation and guardrails around payment stablecoins.
Now, Solana's use cases. I think people in the in the ecosystem will want to know what's next for the Solana Foundation in terms of developing other use cases that may impact the regular consumer. Let's put it that way.
Yeah. Well, this is where I get super excited, because I think to date, you've seen the use cases you've seen on blockchains have all been constrained by the technical attributes of these blockchains. So, for example, most of the chains out there have slower settlement times, smaller TPS, and have an issue with fees and high fees. And there's a lot of work being done to try and address that with L2s and things like that. But with a true layer one monolithic infrastructure that has the scalability and performance of Solana, there's use cases that people hadn't imagined before. So a couple of things to keep in mind, or a couple of things to consider. First is thinking about real world assets, right? So the tokenization of financial assets such as real estate, treasury bills, equities, and things like that. The Solana protocol allows for central limit order books because it is so fast. So instead of using like an AMM, you can actually have like a true market dynamic where you have, bid and ask dynamics in a central limit order book. So I'm super excited to see real world assets come on chain and have like true market dynamics. So that's, I think, one thing. I think in payments, it's really interesting, obviously, what Visa is doing with bank-to-bank settlement, but there are a lot of consumer use cases that are of great interest. So thinking about remittances, cross-border remittances, there are a couple of really cool projects that have launched on the Solana blockchain. One is called Sling Money, another is called TipLink, that are really trying to make it easy, as easy as like a Venmo a transaction, right? To send money to someone overseas. And TipLink, they do it with very simple SMS links, right? So if you think about the use case there, today cross-border remittances are hard. You have all these correspondent banks that have to come in the middle. Fees are high, settlement times are slow. So this is a very natural use case for blockchains. And I think if you have this instant settlement capability, it really is like digital cash that you can send to anyone overseas and they can take custody of instantly, right? And so that's a really interesting use case. We're seeing a lot of momentum there. Commerce is another one. We just announced a couple of months, or like probably 4 or 5 months ago, that Boba Guys is launching a loyalty program on Solana. And I think this is interesting because thinking about, NFTs as loyalty credentials that are composable and can interact with, with other brands and providing token gated experiences. Again, to be able to do that in store, to mint an NFT and enable payments in store, you have to have fast and cheap and instant settlement. And again, so that's another use case we're super excited about. So yeah, there's others. Happy to talk more about it, but there's a lot of innovation that's happening on the backs of a scalable, performant blockchain.
Ultimately, in regards to payments for Solana, do you see Solana continuing to be used as the foundation for other networks, or do you see Solana one day being used as a token for a medium of exchange itself?
I think the market will determine what the right assets are for payments. My personal belief is that as a transactional currency, people want to transact in the currencies that they're used to, right? And so that's why a lot of people are bullish on stablecoins. It seems that whether it's Bitcoin, ETH, or Sol, I think, those assets people might hold for speculative reasons, but for transactional use cases like payments, whether it's a merchant or a consumer, it seems that the stablecoin is the form factor that people want to use, right? They want to use the currency that they're used to using for transactional purposes. So in general, like a lot of the work we've done with, if you look at Solana Pay, which was a protocol that was designed for merchant payments, right? Whether it's in store or in e-commerce, most of the usage there, or almost all the usage, I would say, has been in USDC and stablecoins. So in general, I think we would see Solana as the network and the infrastructure being used to facilitate the movement of these assets. And for transactional uses, probably stablecoins. My guess would be stablecoins would be the ones that would be most commonly used.
So earlier in August or late August, Solana also integrated with Shopify as a new payment option. Tell us about this development.
Yeah, so this was kind of the genesis of this was the launch of Solana Pay, which was about 18 months ago, which was a very basic protocol, but very powerful protocol that enabled any merchant to accept a stablecoin at the point of sale in a way that eliminated the need for intermediaries. It allowed for instant settlement. So you as the user or could send, for example, USDC to the merchant instantly with virtually no fee, and custody. Merchant takes custody kind of at that very moment. It's basically the equivalent of a digital cash payment, meaning there's no analog to you taking a $10 bill and giving it to a merchant. And Solana Pay allows this because the transactions settle instantly. So when you receive that as a merchant, that USDC amount in your wallet, you have instant custody of it. So what the Solana Labs organization did was build a Solana Pay instance, Solana Pay essential payment gateway as a plugin in Shopify. So now any merchant can accept USDC via Solana Pay on the Shopify platform. And there's another partner that Helio that just launched this similar thing with WooCommerce. And I think what's exciting and interesting about this is that it's digital cash in an e-commerce setting, which means that the merchant takes full custody of those funds, no risk of chargebacks. So that was the announcement on Shopify, and we saw tremendous interest and demand from merchants that wanted to adopt this as a payment mechanism.
Ultimately, how does this affect the consumer, the end C2C transaction? Is this going to be, are we going to notice any difference when we use Shopify or when we use Visa?
Yeah, so for Shopify, this is, I think right now the target market is more crypto native people that have custody of digital assets and USDC and want more places to be able to transact with these digital assets. For the user, it's an ability for them to, there's a lot of people focused on ramps and like let's get people into crypto, but now people are like, I have a lot of digital assets and I want to off ramp them or transact with them. So this gives the ability for merchants to cater to maybe crypto native customers that want to keep all of their funds on chain. And so for the user, it's a very simple transaction where they sign a transaction in their crypto wallet and can send USDC, or at a physical point of sale, scan a QR code and sign that transaction. One of the interesting things, as we mentioned with Boba Guys, is merchants building value propositions around this. So building rewards in the form of NFTs. We did a pilot with a cafe in San Francisco in the early days of the Solana Pay launch, where every transaction you made at the cafe using Solana Pay, the first transaction would mint you an Atlas Cafe NFT, and then future transactions you would get a discount if you had that Atlas Cafe NFT in your wallet. So the interesting thing is, innovating on the future of commerce on chain, and what are all of the interesting things you can do when you have these digital assets that are composable and the users actually have true digital ownership of them. So I think the user experience has a lot of room to grow, and there's a lot of startups that are innovating here. I mentioned a couple of them, and Sling and TipLink, but others like Decaf, Candy Pay. There's a whole host of startups that are trying to really innovate in this commerce space. And I think you'll see more coming out of the hackathon that we have going on right now.
I want to learn a bit about yourself before we close off. So tell us about your professional background and where you worked before and how that led to you being currently at the Solana Foundation.
Absolutely. Yeah. My background is more in the traditional finance and payments world. So I worked at American Express for about 8 years in their corporate strategy group, and then in their merchant services division, and was really focused on trying to get new categories opened up for credit card acceptance. Then I went over to Google and led sales and BD for an early stage Google payments product called Google Checkout. And then was part of the team that launched the Google Wallet, which was the first iteration of an NFC-based tap and pay solution, a little bit ahead of its time. But now, you can see NFC tap and pay payments everywhere. So was a part of the early team that launched Google Wallet, and then it went through some iterations, Google Pay, Google Wallet, and then worked on a variety of commerce and offers related solutions at Google. And then about 2 years ago, came across the Solana blockchain, and after meeting the founders and understanding the vision of this to be a really scalable, cheap, fast, performant chain, to me that seemed like the perfect test bed to experiment and kind of build pilots, kind of thinking about the future of payments on the blockchain. So joined the ecosystem 2 years ago. So relatively new to the world of crypto and blockchains, but 2 years is like an eternity in crypto. So
while you were at Google, have you and your team considered the possibility of a stablecoin native to Google? Would that have helped? I know Facebook has experimented with Libra. I don't know if Google has had something similar in the pipeline.
Yeah, I left the Google payments team probably 8 or 9 years ago. So it was early days. I would say now I would be surprised if all of these companies are not at least their strategic planning groups are not at least evaluating something like this, whether it's Walmart or Amazon or Google. All of these companies, there's a lot of reasons why they should at least consider this, right? If stablecoins become a way for to have digital cash, if you look at Walmart, like they have a tremendous amount of money just in stored value for like Walmart gift cards. So tokenizing that and making it more easily accessible and making it a currency that could be usable in Web3 rails and DeFi, et cetera. It's certainly worth everyone, I think, taking a long, hard look at. And I wouldn't be surprised if you see more large enterprises starting to experiment and look at stablecoins and digital assets in general and tokenization.
Ultimately, final question. Ultimately, do you think that stablecoins provide an alternative to our current fiat rails in the sense that we could benefit greatly from using stablecoins and improve upon our current infrastructure?
Absolutely. I mean, the great thing about stablecoins is anyone that has internet net access can now access the US dollar. So I think, putting my sort of US hat on, it's a great way for more usage of the US dollar and cement the US dollar as the global kind of standard reserve currency. So I think stablecoins just provide remove a tremendous amount of friction, especially if you look at cross-border and global use cases, where it's just very difficult to move money from one country to another country. And where there are people maybe in closed economies with high inflationary, sovereign currencies that want to hold the US dollar, just provides a lot more simplicity and ease of access. So whether it's a merchant wanting to accept digital cash, or large banks wanting to settle in stablecoins, as you saw with the Visa pilot, or remittance companies that want to make it easier for a user or a consumer in one country to send funds to a consumer in another country, where you don't have to have 5 hops with different correspondent banks. I think stablecoins provide all of that, right? And as you look at even like in DeFi and tokenization of real world assets, even if people are trading with different assets, you still want a stablecoin, for things like collateral and other kind of settlement and transaction purposes. So yeah, definitely multiple use cases of interest for stablecoins.
I suspect that not just does it have a speed advantage, it also would be of interest to any country that wants to de-dollarize. We've seen the U.S. use the SWIFT system as a weapon several times in history, most recently against Russia. So this may actually see more adoption in emerging economies.
Yeah, absolutely. I mean, I think one of the promises of blockchains are that they are open, decentralized, and permissionless, right? So nobody has control over, again, just in the same way nobody controls the internet. In the same way, nobody controls these blockchains like Solana, and anybody is free to build on it. Anyone can issue a token, whether it's a stable coin or some new asset on it. And I think that opens up a lot of use cases. And it also opens up the need for regulatory framework. So within a specific economy, what are the rules around someone who wants to issue a stablecoin? And so I think all of that, there's a broad spectrum of use cases from fully decentralized to, centralized to kind of hybrid models. And that's the great thing. It's like there are a lot of people that are decentralization maxis. There are a lot of people that believe that, you need some sort of central authority that you trust. An example, the use case you gave about stablecoins depegging, if people want to use a fully algorithmic stablecoin that nobody controls, that's their prerogative. If people feel more comfortable with somebody like a Circle or PayPal, where there's transparency on where the reserves are, that's their prerogative as well.
Excellent. Where can we learn more about the Solana Foundation and your work?
Yeah, I think the Solana website is a great resource. We have hackathons. There are a lot of in-person events as well. We have hacker houses that we do globally every year. So if you go to the Solana Foundation website, you can find that. And then I think a great event, if you're really interested and want to make the trip out, Breakpoint is our global annual conference that we run for the community and developers. That's in Amsterdam, I believe October 30th to November 3rd. Highly recommend anyone that wants to go deep in the Solana ecosystem to attend there, because pretty much everybody that's building or investing in the Solana ecosystem will be there.
Excellent. Well, Sheraz, I appreciate your time today. Thank you very much for educating us about Solana. I'll look forward to speaking with you next time. Thank you.
Thank you, David. I really appreciate it.
Thank you for watching. Don't forget to subscribe and like this video.